It's going to be the Demo Chronicles series. What we're going to be doing in the Demo Chronicles is basically trading demo, but trying to learn the nuances for our trading, because that's the next step after you find your strategy, right? After you find your strategy and you're working on your psychology, you must also find the optimizations within your strategy and understand the little nuances in the market. And that's kind of the bridge between someone who's break even and someone who is profitable, right? Finding all the small nuances. So today we're going to be trading the New York session, and I'm going to be giving you guys insights as to what we learned. We're going to be using things that we learned from the last video, when we blew our funded account, and applying them to the Demo Chronicles so we can actually get them down pat. So we're ready for our next funded challenge. So without further ado, let's hop right into the charts. So what we were expecting, right? Because a lot of you know, I do prefer London. I do prefer the London session. That is what I've backtested the most. That is what I base my strategy on, like, in the first place. That's what my strategy was based on. So with a lot of you know, I like London the most. That's what I base my strategy on. That is what I've backtested the most. So really, the story starts off in London, right? Now, during the London session, I saw the Asia high, which was right here, and the Asia low. Now, the London protraction, aka the ICT traders, we know it as the Judah swing. SMC guys, you guys know it as the inducement. Now, it was to the upside, so we took the Asian high, which means that we're likely to be bearish for London session. Now, ICT traders, you guys may know that we're gonna make the range for London, then we're gonna get a small retracement, right? And on a bearish day, that forms the lower high of the day, right? Which is right here. Now, what we see after that, right, is we see a continuation. Why do we see a continuation? The reason why we see a continuation is because during New York is because we didn't meet an opposing high time frame PDA. So when you don't meet an opposing high time frame PDA, we can expect a continuation. So this morning I really didn't trade London. The reason why is because when we examine the economic calendar, Thursday there was no Euro news until 4 a.m., right? And we know that the typical kill zone for the protraction is around 12 to 2 or just after 2, right? Now, this is at 4 a.m. So already this kind of not nullifies London for me, but it makes it less than ideal to trade. But then also, there was no high time frame PDA that this protraction would have lined up with. The swing to the upside that took the Asian high that we can see over here. There was no high time frame PDA on this side, right? If we come out to the 4 hour, that actually aligned with this swing upwards, so it's not in our trading plan, right? Now, going back to the 1 hour, so we said, okay, cool, we're expecting some sort of reversal within the New York time frame, right? Coming down into this, going back to the 4 hour, coming down into this bullish breaker right here. We know that this is a bullish breaker. Why? Because it's the up move prior to a sweep on liquidity. So we see this, we get the our 3 up candles here, draw a fib, and we're expecting some sort of push into these Fibonacci levels, trying to have it respect this the mean of these 3 candles, at the 50% retracement level. And then we're looking for some sort of upside within London close. As we can see, there is 10 a.m. news, London close right here. So basically what our thesis was going into New York is that New York would come and kill this fair value gap right here, basically close it in, achieve fair valuation here, right? As you can see, let me just draw that out for you so you can see properly. Right? So we wanted to come and close this fair value gap in here, and this fair value gap lining up with this bullish breaker makes it a higher probability chance that we're going to see some sort of up range if we manage to close this and come down into these fib levels during London close. One of the things that makes a fair value gap high probability is that it has time synchronization. I just abbreviate it as time sync. So as we can see, you see how the fair value gap is here on the 1 hour, and then it's also here on the 4 hour, right? That is what we call time sync. That is what we'd call time sync. And then it's also here on, it was also here on the daily, right? Obviously now it's, you know, we're coming into the fair value gap, but before it was just sitting above here. And as you can see, those two candles, this candle's high right here for Tuesday, and this candle's low right here for today, created this fair value gap in here. So it had time synchronization across 3 time frames, which makes it a high probability fair value gap and makes it something that price will want to achieve efficiency on, achieve fair valuation. Now it's just for us to wait for our entry where if price taps into this breaker, and then we can ride this long. Pause. Oh my, pause. We can we can go long here with we can go long inside of this bullish breaker on the 4 hour time frame. When it taps into our Fibonacci levels, what we're going to do is we're going to go into the 1 minute time frame, wait for our market structure shift to the upside, and wait for the fair value gap to form. You know, basic entry, and I'll show that in a second. Right, guys, this does look like it could be a market structure shift. We had this consolidation in here, and then we had this candle break higher. So now we're just waiting for the formation of the fair value gap, followed by the consolidation above it. Yep, this is what we want to see. A push higher. As you can see, 10 a.m. is coming on soon. The time right now is now 49 past 9 in New York. We're in London, of course, so 49 past 9. And now what we really want to see is we just want to see a consolidation here. We don't want to see the fair value gap closed right now. That's not what we want to see. We want to see just a small tight consolidation until the news release, and then the manipulation to the fair value gap. And if that's exactly what we get, then we can re-enter here. And placing our stop below this candle's low, and targeting our original upside here on the 1 hour time frame to close in this inefficiency here. Low hanging fruit, that's what we want. Let's see what the 10 a.m. news release comes about. As you can see, we're in the trade, in a bit of drawdown at the moment, but we'll see what goes on. It's very important that you lock your phone, guys, because you don't want to be like watching your P&L constantly. You just want to be focused on the charts, and we could get stopped out here again, but again, no risk, no Ferrari. No risk, no Ferrari. So what we really want to see is we want to see us take out this high. If we take out this high, then we should be running up in these profits. I won't lie to you guys, you know, I'm a human being, you know. I feel a bit uneasy I feel a bit uneasy here. In my head, to mitigate my emotions, I kind of have to just accept that I could get stopped out here and be happy with getting stopped out and being happy with the monetary loss that we're going to see in the account. So here we've risked 1,000. So instead of being up 12.5 grand, we're going to be up 11.5 grand if this stops us out, which is fine. Which is fine. It's all a part of accepting the risk. You know what? There's another psychology video that I'm actually going to make about accepting the risk, because a lot of people think that they've accepted the risk when they've accepted the monetary potential downside, but that's not true. We've formed our institutional swing point. We've made a failure swing, as we can see here, and we just want to see what the 10 a.m. candle is going to be. And this is the 10 a.m. candle. We're seeing some upside here. Let's see what happens. We've broken this intermediate time high. We want to, if we break this one, then we can be confident that this is going to, that we're going to have further upside. Whilst this trade is actually going, right? Let's interact with you guys. Comment down below. What's the reason why you guys want to be a trader? When you get stopped out, why don't you quit? That's what I want to know. When you get stopped out, why don't you quit? Comment down below. I want to know. I want to know the answer. Because when you get stopped out, it's easy to just be like, yo, I can't lie, trading's not for me. You know, you blow your funded account, you're like, oh my God, like can I really do this? You know, those thoughts do creep in. But then it's up to, is your why strong enough? Is your why strong enough to keep you in the game? Are you gonna, after you've now gone on tilt after blowing your funded account, are you gonna buy another one the next month? Work on your psychology, you know, work on your risk management, and buy another one next month so that, you know, you can pass and change the situation. So comment down below, what is your why? I want to know. Price is just consolidating around the entry. It's just playing about with me, isn't it? It's just playing about with me. It's just playing about with me. But basically, I'm gonna leave this to run now. You know, set and forget, essentially, and seeing if price is gonna break this high. Now that the London close news has come out, and then I'll be back with you guys once it does break this high and talk about, you know, where to take profits and where we can expect price to land, and if it will land at our full TP. So we've finally broken these highs in here, guys. Finally broken these highs in here, and we can expect the further upside that we're talking about. And we're running nicely in profits, so let's see. Yeah, up about, I don't know if you can see that, but up about almost close to 2.5 grand. So life is colorful right now. I want to take half off here so that I can actually manage my emotions. So I don't know, for you guys it might be different, but for me, if I take off half here, it's going to be a lot better for me emotionally. So as you can see, we've now taken off half, and now this is essentially a risk-free trade. It is a risk-free trade and we're running in profits here. So now we can just basically set and forget. We've secured profits so far, and we can now basically just set and forget. Yeah. In the meantime, I might just journal what I did for this trade, what the thesis was, my emotions, the mistake that I made earlier, and stuff like that, just so I can get it in my head and avoid making those future mistakes. So yeah. Also noting how long I was in drawdown for, things of that nature. Those things are important to record for your future references. So yeah, I'll just do that and then we'll be back. So I did end up going to the gym, coming back, and then I let the trade run, and I'll just show you the end result of the trade. So as you can see here, we didn't hit final TP. We did not hit final TP, but we did manage to catch, we would have caught a cheeky 5R there. Would have caught a cheeky little 5R right there. So yeah, that was the London close trade. Obviously very choppy price action in London close. This is something that's quite typical of London close behavior. This is why I like to take 1 to 2s. But yeah, this was our first take profit over here, if you guys remember, and where we actually ended up taking all of the rest of the position off was around this level. That's where we took the final position off, and then, you know, afterwards it went up to about 5R. But yeah, like it went to 4 and then it chopped back down and it went to 5. Yeah, so this is what you can expect when you're trading London close. But yeah, pretty good stuff here. If you guys want more videos like this, please let me know. Drop a like, drop a subscribe. This was like a live sort of tape reading session, just taking you guys through my thought process and how I'll take trades. So yeah, without further ado, I need to go shower now and break my fast and whatever, but I hope you guys enjoyed this one, and I hope to see you soon.